Very well. Ladies, gentlemen, swing traders, day traders, trend followers, happy Saturday. We're just kidding around with you guys. So let's open up. This is going to be the watch list. We're going to be closing out, getting ready to close out September. It's been kind of whippy. Some of these moves just haven't been sustaining themselves, but nevertheless, we've took some good entries and we're still riding these waves. So let's just make sure that we're where we need to be, kind of clear up the trend picture, and let's look at some mentality and make some sense of these things and kind of figure out why we're even here in the first place. So I took up some from Stephen Burns. Okay. Of course I got permission. I just don't take people's stuff without asking. Universities teach people how to be good employees, not how to be wealthy or financially independent. This is why I'm doing this stock analysis. And part of me keeping up with the trend picture and what stocks are up, what trends I should be following, and if other trend followers want to follow them, or if other traders want to capitalize on some of these moves, because most of them are going to be to the upside. May not be that day or whatever the current situation may be, but most all these moves are going to be to the upside. Damn near most, 95%. Okay. And as I showed you guys before from some of the scanners, from the good side, the green side, and the red side on FinViz, we almost never end up on the red side, which is the reason why I don't like buying all those volatile, really volatile stocks like, the ones from last week, TLPR, TLPY or whatever, TPLY, and some of those other stocks that were running like NBEV, and some of those other ones that short sellers are waiting for them to crack. Because they figure that they're pumps and dumps and things like that. It's just sort of that nature. So I really don't like trading stocks that are kind of involved in that whole ordeal. I like to trade stocks that are consistent, having consistent higher highs and lows, and you'd be a damn fool to try to short sell those. Okay. I mean, they might have their points, but I mean, in general, those trends are predominant. You'd be a damn fool trying to trade against the predominant trend is what I'm trying to say. Okay. So universities teach people how to be good employees, not how to be wealthy or financially independent. We're all trying to be financially independent. This is what the base of this show is. This is why I'm bringing you guys this every so often, every few days, or whatever the case may be, is because we're trying to be financially independent. Okay? And this and something that I tell my kids is I never would teach my kids how to go to a university and be like, get this degree and this, that, and the other, and the third. I would only encourage them to get a degree in business management or something that's gonna push you to be your own leader, not to go be somebody's employee. That's never gonna be the case. And hopefully we can get to the state, or I get to the state where I'm wealthy enough to build all the businesses that some of them I've already built, some businesses I've already been running, but some of the main ones are going to take some real capital to build and kind of to set some of these generations and some people coming up behind us for success. So if you're not setting the people up for you coming up behind you up for success, then you're setting them up for failure. Okay, so let's not do that. Let's set the people coming up behind us, which is, you see, Stephen Burns got 1,000 likes on this and 300 and something retweets. I mean, people are really understanding this and feeling this. They're past the who blah blah. And to me, trend following, in my opinion, is like a way past the who blah blah, a way past the trickery in trading. Okay, so but I really love that because I really feel that, and I really teach. Not only do I understand this tweet, but I teach this tweet to my kids. Like, I teach them to be their own leaders, and that's why the success in trading and such forth is so important to me, is because I need to be able to build wealth, and I need to be able to put people in positions to where they're not going to have to be these like type of quote-unquote slaves, so to speak. Okay, so if you're going to go to a university, go to own something, make a game, design a video game, be your own boss, learn how to design something, build something, but build something, give the world something. Okay, don't go work for anybody. All right. So universities get this whole Ponzi thing on just creating more employees. Like the world is focused on creating employees. The world isn't focused on creating leaders and visionary providers and visionaries and leaders and legends and people that are going to help the world push itself forward, propel itself. Okay, I spent a lot of time on that, but that's damn well important. That's the basis of what we're doing here. I love Stephen Burns for that tweet right there. Absolutely. Where you want to be, pick this up from Paul Tudor Jones, one of the billionaires in trend following. Okay, where you want to be is always in control, never wishing, always trading, and always first and foremost protecting your ass. That's why most people lose money as individual traders or as individual investors or traders, because they're not focusing on losing money. They need to focus on the money that they have at risk and how much capital is at risk in any single investment they have. If everyone spent 90% of their time on that, not 90% of the time on pie in the sky ideas on how much money they're going to make, then they will be incredibly successful investors. So, especially I brung this tweet because at this time the market's really whippy. It's having this weird activity, and you have to be day trading some of these moves to kind of get the best of them. The trends are still up, but some of the trends are at their bottom, at the bottom of their trends, so to speak, at the support line of their trends. Okay, the support line of their uptrends. Where we're going to be going over that right now. But so let's protect our ass right now. All right. While the markets are really whippy, and let's watch the capital that we have at risk, all right? And let's just keep making good bets, all right? Place your stops at a point that, if reached, we'll take this up from Bruce Kovner, then we'll jump into the trend picture. This is from Bruce Kovner, another billionaire trend following trader. These billions and these millions can be made, guys, using the trend following principles. Let's stick to the science, okay? Let's do this. Place your stops at a point that, if reached, will reasonably indicate that the trade is wrong, not at a point determined primarily by the maximum dollar amount you are willing to lose. We covered this. Let's jump over here. We should be stopping ourselves. If we were trading RUBI, we should be placing stops here below this support level. Below this support level, not because I got 20,000 shares at 380, I can only afford for it to go to 370 and I'm out. That has nothing to do with the trend. That has nothing to do with the trend and where it's validating that it's going to stop. And my point, if something's going to go wrong on this trend, it's going to break this support level. This support level. It's going to break this level here, risk resistance level, and it's going to break this major support level. Other than that, we have no reason to totally dump our position out. Let me tighten up the time frame. Give you the 3 months. So we should be holding up this support level here. This is your main stop right here. This is the key support level. I added here this week, and I added here this week. Higher lows, kind of higher lows. It is a higher low. It's a higher low here. Higher lows here, higher lows here, higher lows here, higher lows here, and we started adding here. In this area here. When we first noticed the green coming in, we found some support. We started buying here. We started buying up in here. And then we had already bought here. We started already buying this trend back in these areas here to get us inside of this thing. Way back when this trend was starting to kind of set itself. One day I'm gonna get a better thing so we don't have to keep doing that. Sorry, you guys. But so we already started buying RUBI in this area here. We've been watching this trend. We started buying it in all these areas over here. Now we started adding to our position here and here. I added here and here this week. Okay, so we'll see what happens with RUBI, but I'm just saying, place your stops at a point that, if reached, will reasonably indicate that the trend is wrong. This isn't me saying, this is Bruce Kovner. This is billion-dollar advice you're getting. Billion-dollar advice. Billion-dollar advice. Billion-dollar advice. So, of course, we're protecting our ass, but we're not basing our stops We're trading with the wave. We can't trade with the wave. We're trading against the wave, guys. If we're talking about we only want to stop out with our 20,000 shares here and all this stuff here, not based on the trend, then we're trading against the wave. Then we're not trading with the wave like Ed Psychota said. Let's jump into the trend picture. AMRS. Hopefully you guys love all that stuff I just brought to you. I saw AMRS in the week when it was pulling back here, and I said, damn, the pullback's done. This is the point to add. And when it made this move here, I said we should have added here with a stop below. And I said we can add here with the stop below. Now this thing's back inside of the trend. It's back to the upside. And this is a far point to start adding because it could come back down to here. I'm just being honest. So if you're going to add here, your stop's going to have to be here. So you'd have to have, you couldn't take a very large position because you're going to have a wide stop, about $1 stop almost. Okay. But you can add here because the trend's up into the move and the next higher high might be above this. Or we might pull back into this support area. Not sure. But I'd take a long here with a stop below this support area, and then I'd stop the rest of my position out below this. And if we come back to this area, I'd add here. And if you add here, you might just get higher highs to start this thing back up. And like I showed you guys before, this thing is ready to get into this. It has a lot of area that it can start digging into if it starts making higher highs above 9 and 10. So you see 9 here is like in this area. Once we jump into this 5-year territory, because we're outside of 1 already. We're outside of the 1-year time price range, okay? Now we're into this 5. So once we dig into 9, guys, and it's showing it up here, which is the reason why it buckled at 9, because it's a big chunk to get a big chunk of the chart. That's some big price action there. Once it gets through 9, it shows on and rolling, okay? AMRS, I like. ICL, I told you guys about. It looked really damn good, and it's still looking really damn good. There it is right there. Continuation all over ICL. We liked it to add here. Okay, and then we got the continuation. So watch what happens. I don't know if I would buy that just yet. Even though you could buy that and stop yourself out below 595. Okay, and then if it comes, stop portion of your position out below 595. And if it has another higher high at 595, you can add at 595 because that's a support level. ICL, I like that thing a lot. It's about 8 billion in market cap. You guys know we need market cap to carry us, guys. Can't just be buying these stocks with a $10 million market cap. That's a Joe Schmo company. Unless it's something great like the beginning of Amazon. But $10 million market cap, we don't buy those kind of companies, guys. Keeps us out of trouble. Fate, I wanted to show you something about Fate. Something about us buying $3, $4, $5 stocks, okay? If everything matches up for us to buy a $3, $4, and $5 stock, we're going to buy it because this was a $4 stock and it broke out to 14. It went from clear shot in the beginning of 2018, a clear shot all the way until March, and then it started to buckle back, started to retreat and kind of into a channel. Now it's breaking out of this channel, out of $14 and out of this area. So watch Fate for the breakout of that $14 area that it was stumbled at earlier this year, and wait for it to get above this. You can buy this now with a stop below this curl. Stop yourself out a portion here. I don't like to just entirely stop my whole position out because sometimes a stock could pull back here and then continue back. So I'll stop a position, a portion out, maybe 70, maybe 50% or 35% out here. In case price comes here and continues, then I can just add my 35% that I stopped out. I can add it back here, basically at a cheaper price almost. And then I'll stop the rest of my position out here. Okay, because it shouldn't come this far out. Based on what Bruce Kovner just said. All right? And remember what I told you guys on the last show. Hard work. All right? Dedication. All right? And discipline. That's the only how we're going to get anywhere in life. Not just in trading, but definitely in trading. I like FTR for continuation. I like to buy right where it's at now, and I like to stop it at where it's at here. I think this may be the point where green comes in, and we might get continuation back up to 660 and towards this upside. Beautiful thing looking right there on FTR. As you see, it rallied all its way from back here and all the way up. Okay, so I like FTR for continuation. All right. Whoa. All right, I like FTR for continuation. Showing you on that 3-month. Let me show you what the yearly looks like. Okay, barely starting to dig in. Prices start, so we got a lot of upside here. Remember, we look left, like we heard from we heard from Sunrise last week. Thank you, Sunrise Trader. We heard from Sunrise Trader last week. We're looking left to see where we can get at the right. So we're looking left. We get over this. We're looking left. We can get over this. We're basically, in my opinion, this stock is on its way to start knocking. It's on its way to knock these prices down, to start eating up this chart. I really love FTR, really on that 1-year time frame, based on where we're looking at on the left. Based at where we're looking at on the left. Okay, and you got that 200 and that 20 coming to a cross here. That 200 and that 20 cross, man. Prices may go crazy. We can definitely get here, get here. We already get in. We see this gap down. We've already jumped back into it. See it gap down from here, and it gap down to 490, around 5, gap down to $5. All right, now we're inside of this gap down. We're already back halfway through it. So we're going to just keep eating up this gap down, possibly. And once we eat up this full gap down, we'll be at 8 something, and then we'll eat the gap up some more. And then when this 220 cross, it may just make this whole thing, bam, go to the upside. So FTR, watch that. GALT, looking damn good. I can't believe, so it went all the way up here. And it's kind of just rallying its way back. Let's see what happens with GALT, guys. See what happens with GALT, okay? Kind of just rallying its way back up through here. I like it where it's at now with a stop below this. With a stop. This stock ain't going to shoot right up. But if it doesn't hit your stop, which should be here or below this $6 mark, then you don't have a reason to touch it. And if you, whatever your account position size is, based on a 620 stop, based on 1% being a 620 stop and being a $6 stop, that's what you buy. If you can't afford 1,000 shares with a 620 stop, with a 30-cent stop, and a 50-cent stop, then maybe you shouldn't buy 1,000 shares. Maybe you should buy 250 shares. So you can fit this stop into your price. And then when prices go in your favor, then you can max your position size out. Okay? Trade safe, guys, especially right now. These markets are freaking whippy. INNT, I like for continuation to the upside. Remember, we're teaching ours. This is the university. This stock market is the class you should be taking at the university. You are your own boss here. This is the road to freedom if you trade this right. Look at all the self-made billionaires and millionaires, trend followers that we've looked at. This is what you're doing. This is the class you're taking. The stock market. This is it. This is where you should be. This is where you fire Joe Schmo at. Right here. I love INNT. I love what this thing is doing right now. Long trap down here. Pop, drop, trap down, pop, drop. Now this freaking thing is curling, guys. Now this freaking thing's curling, okay? As you tighten out the time frame, you're going to probably see that curl a little bit more. See it? Prices are jumped here. Now prices are kind of higher highs and lows coming in here. I really freaking like this thing. Stop below 650. Maybe trouble below 650. Technically, this is a support level right now, but below 650, the buffer space. All right, INNT. MDXG. All right, for continuation with a stop below 636. I like this thing, how it's looking right now. MDXG. You guys can go back and kind of check some of these on your own. Remember we looked at MRNS coming into the week? Remember we looked at MRNS coming into the week, and I showed you that we never had to call out the sirens for them? And then when we were looking at MRNS, we were looking at it to get over this level here. Remember I said a breakout over 8, guys, is the breakout level? That was on Thursday, coming into closing the week out. Remember I showed you guys this. Remember? And I said 8, this area here, this is where we were sitting at on the start of that day, which was right here. This is the start of that day. We were sitting right at 8. And I said, okay, guys, 8's the breakout. And look what happened that day. We added almost a whole freaking point right up to 9. So MRNS, congratulations on the breakout above this level here. All right. Congratulations, MRNS, on the breakout. Now we just need a full candle close in this area somewhere. Might pull into this little area back here. But boom. Now we're starting to open up this chart some more, ladies and gentlemen. MRNS. NBEV was one of those really volatile things that I don't like short sellers to eat off of me, which is the reason why I don't trade like a lot of hype and a lot of marijuana business and all this kind of stuff. I don't like trading news. I like consistent, what did I tell you guys? At least 3 to 4 consistent higher highs and lows, even though NBEV obviously showed this from the 17th. From the 17th, we had consistent higher highs and lows coming into this thing. If you were a breakout trader, you would have bought the breakout above this in the first place. Because I already know NBEV is not a $2. I don't remember NBEV really trading this cheap. I remember it trading higher than this for some reason. I don't know why. I remember it being like a $5 stock. Maybe I'm tripping out or something. But anyways, NBEV for continuation, guys. But what I was trying to make a point. I don't like buying just spike ups, okay? Even though you could have bought this as it very convincingly climbed over this breakout level here in the monthly on this time right here. Kind of just broke out of that and then it climbed. So you could have bought this based on this is regular price movement, guys. This isn't just like a stock, a giant green candle, you just buy it when it's up here and then you're shark bait for the short sellers that buy things when they break down here. Okay? So I don't like stuff like that. So not to say, all right, so we'll see what happens with NBEV. If anything, you guys stop yourself out below this area here, below 550. Okay? And then this thing might even open up below 550. All right? NBEV. Just based on the volatility and the trickery that goes on in the markets and all that kind of pump and dump kind of junk like that. We don't trade pump and dumps, guys. We do not freaking trade pump and dumps. We trade consistent price action to the upside. We trade trends. Okay, we don't trade pump and dumps. We don't trade things that just show up with a freaking pop up on just out of nowhere. They just pop up. So any at the top of this yearly time frame, at the top of its highest prices in the year. So I like it at that 52, at that new high up there. Okay. Some gentlemen I know, or some peep traders I know trading this NLST. I don't trade cheap stocks. Okay, I don't trade anything with a market cap below $500 million to $250 million. But you guys can take a look at this NLST if you want. I don't really like it personally. I don't like all this. I need some consistency in where we're going. I can't look left and make an assumption off of this. Okay, but anyways, nevertheless, this thing is kind of moving in price, so to speak. So I don't know what to say about that, but it's kind of moving in price. Has some support, some strong support level here. Okay, underneath 40 cents. A little bit out of our program here, though. Okay, actually, it's a lot outside of our program. NVCN, I'm just watching it for whatever reason it broke out of this. I don't know what's going on here. So you guys can keep an eye on this NVCN and kind of try to figure out why it broke out of this little thing here for some reason, or I don't know what's going on, whatever this means. A split, or it had a reverse split. Okay, so that's what that's about. I don't like trading reverse splits, so we're going to scratch that. Even though I know reverse splits have had some good behavior, but that's more or less for day traders. Guys, we trade consistency to the upside. If we're going to trade a breakout, this wasn't a reverse split. This was just a pop up in price. Okay, this was not a reverse split. You don't see an S here. This was not a reverse split. This was just, we don't buy reverse splits, guys. We just buy, if prices are going to pop, that's on normal behavior. That's on whatever the market decides, not because it reverse split. So it popped up here, and we could have bought this pop up. Okay, once it started consistently following this out. So NXEO, and I showed you guys this thing already it was already on our watch list, and as you see, as it was on our watch list, it continued. Okay, so leave that on your watch list for continuation. You can take a long on that with a stop below 220, with a stop below support or there. Okay, I know I have a few tickers, but we're trading trends, and we need to be vigilant of that. All right, we're trading trends on stocks, which means we need to have quite a few different bullets in our we need to have one or two clips on our hips when we're in this war here. Okay, we need some firepower, some regular bullets. We might need some grenades. We might need a rocket launcher, and we might need to bring out the helicopters in case things really, in case we need to step our war levels all the way up. So all these stocks are just firepower on your belt. Okay, when you need to start reaching for different bullets out of your arsenal. Remember this though: hard work, dedication, okay, and discipline. We ain't gonna get nowhere. You ain't gonna get nowhere in life without that. I don't give a damn what it is or where it is. Everywhere I'm at now, I got there from hard work, dedication, and discipline, and studying my ass off. No one's gonna get anywhere without that. I like this SUPV Grupo. I don't even know what Grupo Superville is, but this is nice. I like this. Breaking out of this long downtrend, freaking whole lot of upside up here. We need to look left. I already know to look left to know what's going on right, but I validated that with a quote from Sunrise Trader on the last show a few shows ago. So we need to look left to understand what can possibly be going on here, where we can possibly go. Okay? All right. We already chewed through this gap down. Remember I told you guys, prices gap down only to reverse and gap up from where they gapped down at. Now, I'm not saying to just buy anything, but when prices gap down, just buy this little thing here and take it up. All right? Simple as that. SUPV, TRXC. So I like that SUPV looking really damn good. Damn, that looks good. TRXC broke out of this. Broke out of $6, guys. And it's trading up here now, okay? Trading above where it couldn't break out. Look at the yearly real fast. So I'm not a liar. That's the yearly. Wait. We broke out of this, first of all. We broke out of this. Remember I told you guys when stocks want to break out, you're going to see a giant candle to kind of signify a breakout. So we broke out of this. Looking left, we broke out of that. We had a higher high up here at 6 that we couldn't get over. Remember I told you we called a play. The play call was red 75. It was actually green 75. Or actually, let's say green 550 because it was inside of green 575. Green 575. And boom, we got up through here. Now we're trading on top of this level that we were avoiding. So I like TRXC anywhere above $6. You can take a long on this thing right now and put a stop at 6. As long as it's trading above 6, we're good. Okay? Or you can wait for some pullback. It might pull back to 6. As you see, it went to 6 here, tried to get above it, buckled here, came back to 6, and then it called the 575. 575, we're going to get through, and boom. Remember I told you guys, big candles on breakouts. Big candles on breakouts. Big candles on breakouts. All right, TRXC. Trivago. All right, I remember this thing being a $20 stock not too long ago. maybe over a year when I traded this thing last, $10 stock, something like that. But showing some consistency, and it's whipped right up on top of that 200. Let's go to the yearly because we need the yearly to get a 200-day clear picture, okay? That jumping right at that 200-day, this 20 getting ready to cross it. So this 20 might carry price over the 200, and the 200 will carry the 20. All right? Watching what's happening before it happens. That may be a picture starting to develop on Trivago. There's the higher highs and lows, the consistency. Stop yourself. You can wait for this thing. I don't like waiting for stocks to do stuff, though. But to see what happens with this, though, okay? Trivago. Definitely on some upside. And definitely inside of some upside rotation, so to speak. Definitely on some upside movements there, okay? All right. This is what we're going to the universities. I'm long XENE. Okay, long XENE. This may be green candles coming into this thing now, guys. A lot of pull-ups and pullbacks, pull-ups, pullbacks, pull-ups. So when this thing went up to 1550, I didn't panic, and it pulled back to 13 and all this area. I didn't panic because this is normal price movement for this stock. You guys know from watching my show, we don't panic when we notice normal price movement that this stock always likes to do. This stock always likes to have a higher high pullback, higher high pullback, higher high. So when it made this higher high and pulled back, I'm just looking for another area to buy here, waiting for the green candles. And when we pull up, when we tighten up, we might see some green candles coming in there. So here's the green candles coming in now. Already right here, some traders buying it up from 12, whatever this is, 1265. From 1265, traders started buying it up. Bought it into 1310. Now this thing may be on its way back. Look, pull back here and then a jolt. Okay? So pull back here, this thing jolts fast. So it might just jolt all the way. Start jolting all the way. Start getting parabolic up into 16 over 6. Next higher high is going to be over 16, guys. So this thing might be calling a play. 13, green! Green 13, green 13. And then we're looking for plays to call to get to the upside, okay? That's just an analogy, guys, with my football thing there. It's just an analogy of what stocks are kind of figuratively doing here, okay? ATRS, remember we liked this thing earlier this year. Higher highs and lows, just consistent movement up to the upside. You could have bought this thing here when it went green, when it started going green here. And then now you see this trend started picking up. But you could buy this thing again here with a stop below 13, with below 315 ATRS for some of those cheaper. On the cheaper stocks, I like to take a larger position because, you know, they're cheaper. And we've seen some 3, 4, 5, 10. We've seen some 3, 4, 5, 2, 3, 4, 5, $6 stocks end up being $26 and $36 and $46 stocks. Definitely even $16 stocks. So at least 10 points on the chart available with those RUBIs and those ATRSs and ICLs and those cheaper, you know, INTs and stuff like that. INNTs and stocks like that we were looking at. CDMO found itself, kind of had a higher high up here and trickled down. Now it found itself and we're just looking for continuation. We've already got continuation. Sorry about that. We've already got continuation to the upside on CDMO. I'm long that thing and it feels good to see some continuation come back in that thing. Nevertheless, like I told you guys, when you're trend following with me or when you're trend following in general, you're going to start developing some gut when you start taking longs and sitting inside of trends, and you got to kind of wait for them to catch themselves and wait for higher highs to come and kind of wait for these pictures to start developing. You're going to start developing some guts to kind of start sitting tight in some areas where you should be, okay? So guts, I developed some guts here on CDNA. I didn't touch my position. Just kind of waited for it to develop here, and now it's back in this area, and the continuations in kind of always validates. Look, we just look at what the trend's been doing. It always has higher highs, pulls back, higher highs, finds itself, pulls back. So what's the difference? Just wait for what we know to confirm itself. You're like, I knew that already. Just let price confirm what I know. and let me stay put long enough to confirm what I know. Prices never came below this, which was going to be like my sort of area to be like, wait a second. If prices close below this or below this, so this kind of area here, then I'm gonna have an issue. And you see it kind of held up right at this resistance, like the support area here, kind of held right up in here. I said, okay, fine, we're on. CDNA. So it feels good to develop some guts, you guys. Kind of develop some guts, and every whip and turn, every turn the market makes, you're not looking to freaking sell your position off. You're kind of like, okay, let's just wait to see what develops here. And if prices start closing way below where they should, like Bruce Kovner, then we have an issue. Other than that, we're staying long. It's business as usual, okay? CDNA, what I freaking tell you guys about see what I am saying, you guys? Every time I make like a fact, or like I put out this little comment, it always gets backed by factual things on these charts and such forth. So I just got done saying the reason why we like to take these $3, $4, $5, $6 stocks long, and we can take a larger position there because they're cheaper. But we're not just buying stocks because, oh, they're cheap, let's just buy it, it's cheap. No, it's cheap, but it's showing us it has the potential to be a home run. It has the potential, when we look left, we see upside on it. All these things are matching up. So let's take a large position on a $3, $4, $5 stock and sit tight. And then if it gives us what it gives us, it could possibly be a $25, $26 stock. A $6 stock can always double itself and put up 20 points on top of its 6. A $2 stock can always double itself and put up 20 to that 2. It could be a $22 stock, or it can easily be a $12 stock, which is a freaking large move. Humongous. And people are like, well, I really doubt Ed Sykota made 250,000%. I'd really like to see. Yes, it's possible. He did it. Stop being a doubter. Stop denying the proof that's in the pudding. You have to look at things for what they are. And stop being so damn gullible. Right? You buy all this shit you see on the news and all the shit they sell to you, every commercial, you know, has a reason why it's a freaking commercial, because they want you to freaking buy it. Stop being so gullible, just buying the hype. Buy something that's proven, that gives you some validity behind it. Okay? Hard work, dedication, and discipline, okay? You're never going to get anywhere in life without that. I'm going to close this up, and I'll see you guys. Hopefully you guys enjoy your Saturday, enjoy my show for the Saturday. We're going to be doing some stock. We might be doing some stock talk. We will be doing some stock talk this evening, and I'll see you guys there. Oh, wait a second. Let me show you guys UPL. I obviously have it on my list for a reason, and it better be showing something decent. So here goes another cheaper stock. I don't really buy $1 and $2, $3 stocks too much, but if it's having the right criteria, yes, we will buy it. And here we have a lower low, the lowest of the lows here, so I like to buy this thing with a stop below this where it bounced, and it bounced again, and then it made bounce here, and it made bounce here, and it bounced here. This thing bouncing to the upside, guys. This stock is definitely bouncing to the upside. It's already chewed up the gap. How many lessons are we going to learn on this show? Stocks gapping down on themselves only to turn around and to gap back up on themselves? Like, what are you doing? Why'd you even... That's like making a U-turn. It's like, oh, we're going here. It's like, no, well, we got to make a U-turn. Like, do you not know where what are you doing? But markets can remain irrational, you know, longer, something like that. I stole that from Great Stock Picks tweet. Okay, so you know what? Just let me shut up. Stocks can remain irrelevant. You know what? Yeah, okay, right. Anyways, this is irrational behavior in my opinion. But anyways, let's buy the irrational behavior and let's buy the higher highs and lows. Okay, I'll see you guys In the middle of, I'll see you guys. Let's trade these trends, guys. Ruby's running. A lot of good things are running. This is a long show, but you know what? A lot of information to cram in there. So you guys enjoy, and I'll see you guys. Happy trend following, and I'll see you guys in the middle of the week. Happy trend following. Manage your risk, protect your ass, and let's hit some home runs. Let's keep hitting these home runs.